You're watching today's video technical update presented by FXTimes. It is Friday, September 3rd, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The platform I will be using for this analysis is VT Trader. The Non Farm Payroll release is traditionally watched for clues to the direction of the US dollar. However, although the US dollar gained some volatility after the economic releases this morning, it was the Japanese yen that saw strong moves. The long tails of 4-hour candles and Japanese yen crosses reflect this volatility. Let's take a look at the US dollar, Japanese yen, pound yen, euro yen, Aussie yen, Canadian dollar yen, and the Swiss franc Japanese yen pairs. There might be a strong week ahead for the Japanese currency. This video is being produced at 3 p.m. Eastern Time near the end of this week's trading session. First, we'll start with the US dollar, Japanese yen. Not going to spend too much time on it. You can read about it in FXTimes and the weekly update. Here, just want to remind everyone that here we have a short-term projection to 83, long-term projection to the historic low at 79.75 and maybe even lower. In the 4-hour time frame, we saw today a rejection of dollar strength. It was stayed under this 50% of this consolidation area, which is my threshold for your bearish outlook. So if the market breaks above 85.60 area, really breaking above this 200 moving average, then we could consider intermediate term ranging or maybe even a bullish scenario. But for now, with this rejection, the market seems to be steadfast bearish against the dollar yen. Turning now to the euro yen pair, and it is still here doing a little correction here, and you can see a two-wave correction attempting to finish a Gartley pattern. The euro, by the way, is stronger than the pound as of late. So here the euro is in a rally, but as you'll see in the pound yen, it's already in a decline. So here we're looking for this rally to complete soon. We'll switch over to the 4-hour time frame. We see this is actually projected using the 100% projection towards 110.1 around that area, 110.1 area. But the market here rejected the rally from this previous high. So what we could have right now is if we do top off, then we should at least see this previous low here at 106. However, I anticipate this market to continue a little further, but if it breaks above this middle of this consolidation area, 50%, then also if it breaks above this 200 moving average, that could be another confirmation. Then I would start considering the bullish to intermediate term ranging action. If you look at daily, that would mean basically maybe returning to the middle of this consolidation zone around 111. Okay, so that's the euro yen, looking a little bullish at the moment, but staying bearish if it could top off under 110.1. Looking at pound yen, again, not going to spend too much time because it's on FXTimes, the weekly update. But here's the daily, and here we are just above this previous low, 2010 low at 127.50, 127 area. If we look at the 4-hour time frame, we see this rejection we didn't see in euro yen. Okay, so it's not as strong a rejection. This is a little more than the body is a little more than the tail is more than the body, while the euro yen is about the same. Okay, so here again, if we do top off below 131.75 area, which is the 61.8% retracement of this, and it's also the projected Gartley here, then we could have another decline, measuring this previous decline and projecting it down. We have a target zone. We're using, moving around a little here, using this projection as well as this projection. Both of them are AB equals CD retracement pattern suggestions, and the continuation should head towards 107.50, 107 zone. Okay, so that's the pound yen. Looking at the Swiss franc yen, first let's look at the daily, and we've been following this anticipating a top here after this two swing attempt. And so far the market continued to rally, although it's laboring, and now today we have this, a stronger yen than the Swiss franc. So we still have some ways to go before we find topping, and then we would have a continuation, or at least a ranging action to go down to the 80 area, or we could continue higher towards 84.50, which is this high, and then we could establish ranging action. If we look at the 4-hour time frame, we see this topping area here after bearish divergence, and if the market breaks below 40 here, this should come down to the 80 area down here. Okay, so that's the 4-hour look, is to return to this previous low here if the market tops off. And some clues we could get is if the market, let me get rid of that, if the market tops off, comes back down, breaks below this consolidation area, okay, then we could at least first look at 81 as the near-term target, and then the 80 as a short-term, but still in the short-term extended target. Okay, so Swiss franc, Japanese yen still kind of in a ranging mode, but hitting a resistance area in the daily. The Aussie yen pair is an interesting setup here. We see a triangle congestion pattern, and we see that at the end of every two swing moves, two swing rallies, we have had a here we ended a little short, but now here we have another two swing rally towards 78.50, and we've seen that top off and continue lower. Also, if you have a count here, you have A, B, C, D, E, and that could complete your triangle. And if the market is to be bearish, Aussie yen, or strong, very strong for the yen, then we could see topping here at 78.50 and a decline at least to the 73.50 area. So that's the daily, looking at some important resistance levels just ahead. In the 4-hour time frame, we see here 78.50 area, and that's also a very important area because that's the middle pivot of this consolidation zone. Okay, you see 50% right here. So that's actually that has to be the resistance for your bearish outlook. If it breaks above that, then we may have turned bullish. We may have turned bullish, or we may be expanding this instead of a congestion pattern. We may be expanding into a wider consolidation pattern. Okay, so 78.50 is an important area to look for the Aussie yen pair. Look for topping there, otherwise the market may have turned bullish. Moving on to Canadian dollar yen, and we see that the market has been bearish, although there is a bullish divergence. So we do have some pause here, and we have a possible, see, if the market breaks above 82, we have a possible double bottom, but at the moment it's simply a sideways or flat correction, and we may actually still see the yen get stronger. See, in the 4-hour time frame, we didn't see much of a rejection here for either Canadian dollar yen or Aussie yen. Aussie yen a little stronger rejection, but here Canadian dollar yen looks to continue this rally, but we will see some resistance at 82 as well as this moving average here. So when the market tests that, look for topping action. However, if the market breaks above, we still have, as you can see in the daily, we have some resistance here at 83.50. So if the market breaks above 82, look for resistance at 83.50, and you could treat this market as sideways, but with a bearish bias. However, if the market breaks above 84, then we could start considering either a wide consolidation or a return to the bullish zone. I wouldn't consider this bullish until it breaks sort of this 200 moving average. The Japanese yen is very strong, and I would also look for confirmation in other Japanese yen pairs to consider Japanese yen weakness. For now, put that on the shelf and continue to anticipate Japanese yen strength, for example here at the 82 level. Okay, so that's it for the Japanese yen pairs. And that wraps it up for this week. I'll be back next Tuesday on the 7th. Thanks for watching. Make sure to stay on top of the market by visiting www.fxtimes.com, and I hope you have a great weekend.